Hello everyone, my name is Dr. Melissa Cohen. Well, welcome to another exciting stock split that's coming up. So earlier this year or this summer, we had Google first, and then we had Amazon do a stock split. And so now it's official that Tesla is going to do their stock split. Now they announced it earlier in the year, but we had to wait until the August 4th stockholder meeting, where the annual meeting where it was officially decided on and voted on by stockholders, because that's what stockholders do. So what is going to happen? The details. So it's going to be a 3-for-1 stock split, and it's going to happen after the close of trading on August 24th, 2022. So what that means, let's just break that down. So the stock price, whatever you have, if you're a current owner of stock, of Tesla stock, up until August 24th, the end of trading that day, let's say you have 1 share of stock. And it is roughly, let's look at the Google stock price here. So as of today, a snapshot in time, it's $884. It keeps fluctuating here, as you can see. So let's say if this was the end of the stock price trading on August 24th, August the 24th, then they would, if your account shows 1 stock price, 1 share of stock, and the stock price is I'm going to round to $890, then that night after close of trading on March 24th, they're going to do their magic and update all the computer systems and all the accounts and such, so that when you wake up on the trading day for August 25th, it will the systems will adjust for that stock split. So what does that mean? That simply means instead of 1 share quantity, you're going to show 3 shares of stock. So if you had 100 the day before, you're now going to have 300. I got to do easy math here on these videos, right? If you have 5 shares of stock on the 24th, on August the 25th, you're going to have 15, right? So 5 times 3 is 15. So what does that mean from a stock price, though? For my easy math, we're going to talk about, let's assume it's $900, right, on August the 24th. So what then they're going to do is divide by 3. So you are then going to have 3 shares on August 25th. You'll have 3 shares at $300 each. Now your total value is going to still be $900. So August 24th, 1 share at $900, it's $900 as a total value. August 25th, you wake up, you're going to have 3 shares at $300 each, so 3 times 300 is $900. That's still your total value. So there you go. So why did they do it? Well, because people like me, I don't have an extra $900 to go buy 1 share of Tesla stock. But if you break it down to $300, I can buy a couple shares of stock right now through most major trading companies and such. So brokerage accounts, things like that. So that appeals to people like me that want to own the company but maybe not be able to afford the high price. Now, I think there's research out there. I haven't found anything recently, so I'm not going to quote anything about, well, what happened? Is this a good deal? Is this not a good deal? This is where you need to do your individual research to decide if this is a company that you're interested in, but maybe you couldn't afford it at the $900 price, but you can afford it at the $300 price. If it's not a good company, you should never be investing in a stock split just because it's a stock split. It doesn't always guarantee it's going to go up. I'll give you an example. I recently, I don't even know, I'll look on it, just within the last couple of years, bought GE stock, right? They were the heyday company in the 90s and early 2000s when I was getting my MBA, and Jack Welch was the dog and everything like that. So the company has evolved. Obviously, it's been 20 years, so they've evolved. Things have happened, business divisions, mergers, acquisitions, divestitures. They've taken on things, taken off things. And so I was like, oh, this will be a great company. Well, so I'll go and buy some stock. I know they're in rebuilding, so I'll buy it low and then hold it maybe for 10 years or something, and they'll do well. And no. So that didn't work. They actually did a reverse stock split. I think I did a video on that one, so we won't talk about that here. But, but you don't, just because there's a stock split doesn't mean the stock is necessarily going to go up. Even with GE, there was a reverse stock split. they wanted the numbers to be different. And it's still down, like from my total value from what I put into it a couple years ago to what it is now. It's down, so that did not even work out to my advantage. So don't use that as a strategy to invest long term. You need to go back to the financials and look at what the company's doing and such. Now I am going to read you some information though, if you are interested about Tesla, besides what you hear on the news, the tweets and things about Elon Musk and all that stuff. Yeah, that has a little bit of influence of what the market does. But from a real long-term growth, if you want to look at, okay, can the company take raw materials, turn it into goods that people want, and make a profit? That's really where the fundamentals of investing in stocks are. And so if we just look at that, I will put a link in this Fool.com. It's a Motley Fool, into the show notes here as well. So you can make, you can click on it, read the link, make your own information as well. Here's a side note. Here's a couple side notes from the SEC. Past performance does not indicate future performance. So just because a company did well in the past doesn't mean it's going to do well in the future, right? That's the disclaimer. Second disclaimer. I'm not telling you to buy the stock. I'm just giving you information about it. If someone is on the internet telling you to buy a certain stock, they are not a financial advisor. I am not a financial advisor. It's kind of almost illegal. Like, they cannot be telling you to buy stocks and things unless they are licensed by the SEC to do so, which means they've passed certain knowledge tests, experience, things like that, by the SEC, right? It's regulated so that people can't sell you bridges in the middle of an ocean, right? Anyways, okay, sorry, we're getting over here. So some of this, even you can look at this chart here on Google. We have an open, high, low. We have the market cap is $903 billion. We have a PE ratio, that's a price to earnings, of $103.89. Dividend yield, there's a dash. Guess what? Company doesn't pay dividends. They take their money that they make and they reinvest it into the company for growth. And so this is called a growth company, not a dividend-paying company. We have the 52-week high is $1,243, and the 52-week low, 52 weeks is 1 year, is $620.57. So you can tell it's not at the high end, it's not quite at the low end, so it's kind of closer to the lower end than it is the higher end. But some things to reconsider and such. I have not looked at balance sheets, income statements, anything like that. And if I have, it still doesn't mean that I can predict the future. You'll see, if you go and look at a lot of research, these analysts and such, there's like 50 analysts now. You've got all kinds of them. You got Morningstar and Barron's, and they're all doing their own have their own analysts with their own ratings, and you'll see it's across the board. So if professionals have their own rating, and it's, some say buy, some say sell, some say hold, some say wait and see, is it 5-star, 4-star, 3-star, 2-star, 1-star rating? And those professionals who read these balance sheets and income statements and things like that can't even agree, then I don't know what to tell you. Then definitely don't listen to me. But I'm not telling you to buy anything. I'm just giving you the information about how the company's doing and where they're at. So you know what? If you want to cut off the video here, go ahead and have a great day. Thank you for joining me. If you want to learn a few more stats about Tesla, so that you, at least if you are interested in the company, well, what do they really do? We just know they do electrical vehicles, but you may not know anything about that beyond that. So here's the information. I'm just reading it from Fool.com. I'll put the link in the show notes. So if you want to do further research, it's there for you as well. So as we know, but here's a couple kicker things you also have to think of. So the company Tesla has 61% of the U.S. battery electric vehicle market, right? That's a big deal. And 20% of the global industry. So that's not, that's a big deal as well. I mean, 26% of market share of a global market share is pretty good. But the thing, the only thing I would also note is we look what's being passed in Congress now about the Inflation Reduction Act, about what's the tax subsidies for companies to have critical parts built in the U.S. So if any of these batteries Are there going to be tax subsidies coming up for people to buy, consumers to buy any of these electrical vehicles? Those are going to affect the company in the future as well. Good or bad, they're just going to affect it. They're going to make that when these laws go into place and such. So here's here's the other thing. So in the second quarter, the total revenue surged $41.6 million, and its adjusted earnings per share soared 56.6% to $2.27. So, there were COVID-19 related factory shutdowns or supply chain limitations that simply halted the production and deliveries last respectable outing and such. So there's additional information here and stats. Always, one thing I learned in college, if you want to know what a college degree is worth, always look behind the numbers. Always look behind what numbers they're not telling you and not sharing. Because some articles are going to give you the good, some articles give you the good or bad. So you need to know all of that as well and just do your own research before you decide if you want to buy the stock or not. So anyways, I hope you have a great day. I think this is the last big tech stock that we have coming up for the year. Have a great day. Talk to you soon. Bye.